For as long as banks have been run by bankers, they have faced two key challenges. One is that it's quite expensive to serve people inside branches. The other is that many people who they'd like to serve live far away from the branch. Well, there could be many solutions to these two challenges. One, the cost one, you can reduce the cost of service inside branches, or you could move people outside branches to cheaper ways of serving them. To serve people who live far away from branches, then you have to find other ways to either bring the branch to them or bring the banking services to them. Today, there is a historic opportunity offered by mobile phone technology and the proliferation of both the usage of mobile phones and the connectivity that it creates to solve both of these problems. But first, before we do that, let's take a look at the history of banking and how banks have tried to solve these two problems in the past. So, like I said, we can start with how do we reduce the cost of serving people in branches? Things have been done. I can remember when I was a bank teller, it was I used a manual system, which took a long time. But over time, banks began to automate. For example, Kenya Post Office Savings Bank in Kenya was able to reduce the time it took to serve a client at the teller to 45 seconds from several minutes, which enabled them to serve more clients per teller and bring down the cost per transaction. But you can only get so far in increasing the efficiency of staff or automating operations. Another way that banks have traditionally reduced the number of transactions in branches is by keeping people out, putting up high barriers to entry. So they have high minimum balances or they charge expensive fees to reduce the number of people who queue up to go to a branch. But that doesn't achieve our objective, which is to help more and more poor people get access to savings accounts. So another way to get people out of the branch that banks have used for a long time is to offer other channels. For example, ATMs. I know that I barely ever go into a branch because I can use an ATM to get cash if I need it, or I can go online and use the internet. Now, ATMs and the internet may not always be an effective technology in, let's say, a rural area in Africa. So another strategy that banks have used, Equity Bank, for example, started using trucks to drive out to where poor people live to solve that problem of how do you reach people that are far away from branches and need to be served. But let's be honest, driving a truck out to that area may be cheaper than building a branch in that area, but it's still kind of expensive. What other things can banks use to reach out to poor people or reach out to rural areas, people who live far away from the branch? One option that's been used for a long time is post offices. In fact, you could say that post offices were the first model of agent banking that banks have used. Post offices are already in these communities, already have staff who are used to making transactions and can be a cheaper option for using banking, for offering banking services. Caixa Econômica is another example in Brazil and was one of the first movers taking services beyond even the post office, but going into things like lottery outlets and pharmacies, and people being able to transact in these places. Recent history has showed us that mobile phones are yet another way that banks can begin to move services out of the branches and closer to where people live. The early uses of mobile phones by banks were rather simple. Maybe they were being used as reminders or marketing new products through text messaging or even calling. Then banks started offering very simple services that didn't involve any cash in or cash out, but allowed clients to check balances, to transfer money between accounts, or maybe even pay bills. But that doesn't solve the teller transaction problem, the how do you get cash in and cash out of the bank. So as I said at the beginning, today we have a historic opportunity to use mobile phones to help solve some of these problems that bankers have faced for generations. How do you get the cost of serving clients down, and how do you reach people who live far from the branch? We've seen with M-Pesa in Kenya, a mobile money offering from Safaricom, that it's possible to get cash in and cash out transactions close to where people live through the network that they've built. But that's not exactly from a banker's perspective. And so how does a bank take advantage of linking into that. There are essentially two different ways that banks can leverage mobile phones to serve their clients and reach them closer to where they live. The first is by the bank developing its own mobile banking platform. Great example of this can be seen through the Rabobank partner banks in Tanzania, Zambia, and Rwanda. Zanaco in Zambia launched a mobile banking platform called Zapit that enabled its clients to check balances, transfer money, pay bills, buy airtime. Earlier this year, they have added on to the value of that partnership by allowing clients to not only cash in and cash out through their bank account at the branch, but also through a partnership with post offices. National Microfinance Bank of Tanzania learned from Zanaco's product and launched its own platform called NMB Mobile. NMB Mobile has seen transactions as high as 1.6 million transactions per month for clients doing things like checking their balance, transferring funds to other NMB holders, paying bills, or buying airtime. Another Rabobank partner in Rwanda, BPR, just launched their mobile banking platform 2 weeks ago and have already seen 20,000 clients register for this service. These three examples show us how a mobile platform can help banks offer some services to clients through mobile phones. Another way of looking at the potential of using mobile phones is through partnering with mobile money. We have seen this kind of partnership most prominently in Kenya with the partnering of Equity Bank and Safaricom to offer the M-Kesho savings product. This partnership between mobile money and a bank enables even more functionality than what I had described earlier, because now clients can take advantage of the cash merchant network that Safaricom has built up through its M-Pesa offering, and now clients are able to get cash in or cash out at these cash merchants, which are essentially like little cashiers that are at the service of the bank.